Test, test. Test, test. All right. All right, little technical difficulties there, but let's get started. It is January 12th, 2021, and we are here for my weekly update. Let's get it started. First, just a quick disclosure. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Quick position disclosure, mainly got longs on, added just this WW just today, Momo just a little while ago, probably will just be a day trade. Happy to go over the markets, my positions, charts. Let's get to it. I guess first quick background about myself. I think if you've been following along with me, I've been doing these for probably working towards a year now, these weekly webinars. But my name is Derrick Oldensmith. I am senior trader and registered principal for T3 Trading Group. I have been with T3 really since 2010. I've been licensed with T3 Trading Group as a professional trader since 2011. I've mentored well over 100 professional traders of the company. Currently managing a group in excess of 50 traders. Love to travel. You know, it's got some of my hobbies in here. You know, I'm a former professional world champion kickboxer, had like 40 pro fights. Once upon a time, T3 was a sponsor of mine. I retired from that a few years ago. And now this year, just been traveling. I am back in Idaho, and there is a lot of snow on the ground, which has me pumped. If you're a skier, I'm 15 minutes from Targhee. I'm 30 minutes from Jackson Hole. Can't wait to get out there this weekend. Last weekend, I was in Utah. Got to ski snowbird for a couple of days. Awesome mountain. But anyway, we're mainly not talking about skiing today. We're mainly talking about markets, and we're talking about T3. So if you got any questions about any of this stuff that I'm going to be talking about today, here's my email address. Absolutely reach out. With that said, let's go to the charts. Let's see what's going on. Oh, wow. Market just took a solid dip right here as we're starting the webinar. That's interesting. Not sure what's causing that, but let's start with some big picture technicals. So yesterday was a down day for the market. It didn't seem too bad, even though we were down about a percentage point. It's really just an inside day for the SPYs, and it's after we got extended here on Friday. So I don't look at Bollinger Bands much, but one of the guys in my VTF room who's a big contributor, he gets a note in there for us every morning as part of the team's research. He let us know that we were above the outside Bollinger Band, the upside Bollinger Band 2 trading sessions ago, which just is another indicator of the market being a little bit overbought. The way that I like to look at overbought versus oversold in the marketplace is basically where the market is trading. And so you can look at this for any time frame, any stock, any market. It's where the market is trading versus the space between the 8 and 21 EMA. So you can tell here on Friday, you know, when we're up at 381 and the 8 EMA is, you know, not even 375, I would describe that as a market that's extended in the SPYs by about $6, which isn't massive. So we took a little bit of a rest day yesterday, an inside day for the SPYs. That's healthy, normal bullish price action. Inside days are important for continuation, and we actually utilize an inside day execution strategy for myself and a bunch of the traders that I'm working with, where we actually will look at these rest days to see whether they break up or down, and there's potentially a trade there. Usually it's a with trend trade, meaning you have a strong market, a bullish market. These technicals here, we're clearly trending higher in the SPYs. I'm telling my team every day, even though we had a down day today so far, we had a down day yesterday, you're better off erring to the side of the longs just because of these big picture technicals until that picture changes, and that picture hasn't changed yet. So normally, this inside day yesterday is a potential upside continuation trade. Because again, bullish market, we broke out, we got above this 375 area in the SPYs, which was acting as resistance, got a little bit extended, had that rest day. If you want continuation of the breakout, if you want continuation of the trend, you want to be buying the break of the inside day. But guess what? It didn't happen. If anything, we actually broke down. So this is an inside day and down, so that puts yesterday's candle, kind of wipes it off for us as a trade. I don't want to be shorting the break of this inside day because there's not enough extension, right? If we have a technical pullback within the confines of a bullish market, which clearly we're in a bullish market, that technical pullback should really just be somewhere between the 8 and 21 EMA here on the daily chart. I'll be really curious to see if 375 area acts as some support for the market because that's where we just broke out from middle of last week. But at least for the moment, a little bit of downside price action. And again, literally right now here on the 5-minute, we just kind of broke down a little bit of potential capitulation here. So again, talking about this idea of extension, we just looked at how the daily chart was slightly extended to the upside. Well, now you can apply that same concept to a smaller time frame. The smaller time frame here on the SPYs, again, I don't know what just caused this breakdown because I'm here doing the webinar with you guys instead of managing my positions like I probably should be. But you can tell here, at lows right now, we were just at 376 and change. The 8 EMA on this 5-minute is all the way up at, almost 378. So we could say that this market was extended by, $1.50 or so to the downside on this 5-minute chart. So what does that mean? When a market becomes extended, you expect a time or price correction. Right now, we are price correcting back up to the moving averages here, back to that equilibrium. So then you'll want to see, are we going to make a lower high? Are we going to hold maybe this opening low as resistance? It's also about where the 8 EMA is. Make a lower high and work our way down and eventually break this low. And that could signify more of an actual legitimate breakdown in the marketplace itself. Let's take a look at some of the other indices here. See if we have a different picture. The Nasdaq is clearly showing relative weakness. Nasdaq's down about 0.8% today. Same thing though, at least for the time being, it's just pulled back to the space between the 8 and 21 EMA. Overall, this is still generally healthy bullish action. You can see here that the Qs have just been in kind of this grindy uptrend ever since we kind of broke out of this bigger consolidation. We had like a 2-3 month consolidation. We broke out of that in November. We've been in this grindy uptrend in the Qs. The big outperformer has been value, right? Small caps, mid caps, represented by the IWM, the Russell 2000. The IWM looks fantastic. Even right now with the Nasdaq down 0.75%, the IWM is up 1.2%. IWM has been showing relative strength across all time frames for months now. And that is continuing. Every once in a while, the Nasdaq's been having a catch-up day. And the reason why this is interesting is because almost all year, since their coronavirus low back in March, it's been the opposite. Almost all year, it's been Nasdaq showing relative strength and the IWM not being able to capture a bid. You can see here's the high from February, right before the coronavirus breakdown. We were not able to break that February high until November for the IWM. The Nasdaq broke its February high in early June. It took another, 5 months for the IWM to be able to do that. However, recently, these last few months, there's been a lot of talk about a rotation into value. Why? TLT, this is our treasuries, right? Prices inversely correlated to the interest rate. So we know that the TLT here has been selling off, actually touched an important psychological level at 150 today, and that we know that interest rates have been really rising. They've gotten above 1% over the course of this, bond sell-off. Those interest rates are going up. What does that mean for stocks? Well, it's good for value, it's bad for tech. And again, where do we see that relative strength? Where do we see that relative weakness? Well, tech here, still in a grindy uptrend. It's still bullish. But look at what the Qs have done since November versus what the IWM has done since November when it actually, right here is when it actually had that breakout of the coronavirus high that I was just referencing. And this has just been in this beautiful accelerated uptrend. I think it was just a couple weeks ago here in this webinar that we identified 200 as a psychological level for the IWM. It's only a psychological level because it's all-time highs, so it can't really be more than that, right? It pushed through, failed, led to a deeper price correction, again, just into that equilibrium area here between the 8 and 21 EMA. Inside day break up through 200. So this is like a breakaway gap, this gap that you have here. It's a technical breakaway gap. That's also something that I work with and I teach my traders, and part of the training program that we have. Gap analysis is a massive part of what I do on a day-to-day basis. Every single morning when I'm formulating my game plan for how I want to approach the market, how aggressive do I want to be? Do I want to be short focused or long focused with my day trades today? It all starts with gap analysis. So again, beautiful breakaway gap here, breaks through 200 bucks. Now, I was just identifying this in our morning meeting this morning, setting up as a bull flag. Got extended, right? First time it got up to about 210 a couple trading sessions ago. It's at 210. EDMA's at 202. It's extended by $8. What does it do? Price and time corrects. Now this ADMA is caught up to the base of this flag here at about 204 and change, 205, and it's potentially setting up for continuation, and that's on top of the relative strength. Again, relative strength. IWM is up 1.2%. Qs right now are down 0.8%. All of these things that I am discussing right now are what I refer to as layers of probability in the marketplace. And again, this is also something that I work a ton with about my team. I have a class on this in my training program. The formula of trading is risk, reward, and probability of success. And risk reward is easy, right? It's just simple math. I'm risking 10 cents because I can make $1, right? I'm risking 1 to make 10 in that case. Simple math. Probability of success is much more difficult. It's much more dynamic. It's much more difficult to analyze. That's because there are so many things that are affecting the market at any given point in time. And these are the things I'm talking about. Understanding relative strength and relative weakness. Would you be better off buying something that's in the IWM today? Or would you be better off buying a FANG stock, a big tech stock? Well, really, at any point over the course of the last few months, you're better off buying those mid caps, small caps, and value names. That's where the relative strength is. That's where your higher probability of success is. Today is no exception to that. Understanding execution versus extension. For example, we were just talking about the extension here in the IWM. Currently, IWM is at 210. ADMA is at 204, 205. It's not massively extended. It's a little bit extended. But what this means to me is if I were to buy the IWM at 210 and I were to have a stop loss at whatever the low of the day today, 208.50, just as an example, there's a decent high probability of me getting pushed out of that trade even if the idea works, just because I'm buying something that's extended from the ADMA. As a general rule, I always like my stop losses on whatever time frame I'm trading on to be lower than where that ADMA is. It lowers the probability of the wretched shakeout, right? Everyone hates, almost more than anything, myself included, when you get shaken out of a position that then works, right? You take your trade, you like what it looks like, you put your stop loss in, you get stopped out below, and then that trade works. Well, you're going to have a lower probability of getting shaken out if your stop loss is within that equilibrium area, is where those moving averages are. And again, that applies for any time frame. Otherwise, if you're taking a trade where you're out your stop loss, out is the word that my professional team and I use for stop loss. If your out is above the ADMA on that time frame, and it could be a 5-minute chart, you are relying on pure momentum to pay you. And guess what? Sometimes that's fine. Here's a trade that I did not take today in XPEV. And I'll tell you why. So my alert went off for XPEV. I know it had some news this morning. Let's go back to the daily chart here. Everything I do stems from the daily. I identified at this area between like $47.75 and $48. If it breaks through that area, this name could be breaking out of this pattern here. had a massive move, had a price and time correction, now it's starting to turn back up, or if it starts clearing these levels, it's breaking this descending trend line, this thing could start really capturing a bid again and maybe work its way back up to $75. So everything I do starts from the big picture and then it works its way down to the small picture. A lot of what I do is swing trading, where I am day trading around a core position. So, once again, kind of a similar scenario here. This signal of breaking 47.75, that's the signal that I want to get back involved in this thing as a potential swing trade. But then I need to break it down to the small time frame for execution. So I looked at this thing when my alert went off, and I'm like, okay, my alert went off. I know I want to buy somewhere around 47.75, and I just looked at this huge run that it had. Big green bar, big green bar, big green bar, breaking out. And I'm like, okay, I'm interested in this, but where's my risk? Where's my stop loss, right? I would really need to give it all the way down to this low here at 45.66 in order to take that trade properly. Otherwise, again, I'm just relying on pure momentum to pay me. So a lot of times what I'll do in this scenario is I might buy a small feeler at my level, understanding that I got to give that feeler a lot of risk, and I'll let the trade play out and let it build in. In this case, I just said, you know what, too extended. I already have whatever my disclosure said, 15 long positions on, something like that. I really do not need to add in a 16th long position when I'm buying this degree of extension to rely on pure momentum to pay me. Well, guess what? I could have just done it anyway, and that momentum would have paid me. But it goes back to probability of success. This trade worked really well, even though I didn't take it. I think some members of my team are involved in the stock today, which is great. But I elected not to because I felt that the degree of extension on my execution time frame, plus the risk of where I would have to give it to trade it properly, it just didn't justify it. Higher probability of getting shaken out because of the extension. Not a fantastic risk reward because of the amount of space that I would have to give it to. So I elected to pass on the trade. Being flat is in a position. It's fine. Even though it worked out well, I have no regrets. But it's just an example of, because as often as you see the momentum continuation, there's going to be a lot of other times where you're buying this high here after this huge move, and you're enduring all types of pain as it has a technical price pullback, and then you're out of the money, and that's assuming that the trade even works. Let alone if the trade fails, then you're just in a really bad spot. What I did get involved in today, I got involved in this Weight Watchers a little bit today. I really like the candle from yesterday. So this is a story stock. We know Oprah's been involved in Weight Watchers for a while. I remember back in 2017, 18, I can't believe how fast time goes by, when Oprah was first announcing that she was getting involved in Weight Watchers, and it had this insane move, right? It really went from like $15 all the way to a peak of $105 back in June 2018 or so, and then gave a 100% correction. All this tells me is that this name has the ability to have a lot of momentum when it wants to. Smaller time frame, coming here more recently into 2020. Obviously, it's been ranging out for a long time. Put in a recent peak here at 33 bucks. Has been in this descending channel here for quite some time. But yesterday's candle was of interest. 2244, basically made equal lows. So I have a potential double bottom, and it's on beautiful confirming volume yesterday. So now I need this thing to break this descending channel. And it'll do that officially in my books by getting above 27, and then I think it could give me a move back to these highs here. So then the next part is execution. I wanted to be really patient on that execution. I mentioned to my team this morning, if I could get a pullback, pre-market when I was looking at it, it was at $26. I started with a feeler on it, but I could get much heavier if I could get prices between $24 and $25, which is exactly what it did this morning. Initially gave this sharp pullback, kind of let me get in based on the daily picture. As a swing trade, daily wise, I really need to give this down to this low, 2240 or so, to make sure that my idea is going to work out. But again, risk reward probability of success. if I'm able to build into this thing here in the $24 area, take $2 worth of risk on it, and I think that this has the potential, if it's able to break this descending channel, fulfill this double bottom, volume confirmation on a good looking candle here. I know it also got a shout out, I think, on CNBC yesterday, which is helping to give it a strong gap up. This thing starts clearing this 27 bucks. Now all of a sudden, I got a risk reward where on my swing position, $2 worth of risk can become possibly, $9, $10 worth of reward. So it's a good risk reward there. I like it, and I like the way that the name trades, so I'm able to day trade it pretty well around that position at the same time. I took a little trade in this Momo today. I think it's just going to end up being a kind of a day trade. We saw the unusual option activity in my VTF room. Again, ProDesk VTF, we're getting a ton of awesome information in there. We're getting the news in there real time. We get that large option order flow. So first of all, before we even saw the option order flow come in, one of my top traders in the VTF, his name is Felipe. He calls it out to the team. He goes, guys, big volume coming in Momo, something of interest to pay attention to. When I see big volume come in like this, and by the way, so this is like the Chinese Tinder. Generally not a fan of the company. Technically, it's had a very strong base here that it's built out of, and it's potentially breaking out of today. So like the technicals, don't really like the company. For me, both are important. The best trades I have are when I like the company and I like the technicals. The company gives me that qualitative fundamental understanding. The technicals give me the execution, the risk reward, the probability of success, all those factors that we're talking about. So Felipe in the room, not my idea. He goes, hey everybody, check out Momo here. Beautiful volume coming in. We see this Maribozu come in. He calls it out really early. I get involved during this candle. And when I see a big volume Maribozu candle, that's what this type of candle is called in Japanese candlestick analysis. I have to use the low of the bar as my out, right? I know. The question I'm always asking myself, when I'm asking myself, where do I put my stop loss? Where do I put my out? The question that I'm always asking is, where will I know that I'm wrong? And the answer is, I know that I'm wrong if it is ever able to fully negate this candle, fully negate this high volume candle. That means trade back below it. So Felipe calls it out early, able to get a decent price in this candle. Right after that, we see the bullish option flow come in. Bullish option flow for me, that's another layer of probability. I know that when I have bullish call flow coming in behind me on a trade, that means that I'm going to have a higher probability of success. It's a leverage product, right? And then what ends up happening is the market makers have to take the opposite side of that trade, the opposite side of that options trade. They then need to hedge themselves by buying the underlying stock. So that's ideal. That's what we want to see. And then, it held this 1440 really well. So based on my trailing stop system, I'm able to then raise my stop really to this low, 1440. So the low is 1441. So basically, like everything else in trading, I have a rules-based approach for everything that I do, which includes trailing. I love trailing stops. Why? Because they put you in win-win situations. Either once I'm able to raise my stop basically to like better than my price as an example, it puts me in a win-win scenario. Either I'm going to make money or I'm going to make a lot of money in the trade. And then it gives that next level of continuation. Perfect. Now it gave me another pivot low here. Great. Pivot lows within equilibrium, right? Got extended. Gave a 5-minute shooting star on high volume. What does this candle mean? Does this candle mean reversal? No, it does not. It could become a reversal, but really all this candle, this upside tail means is retracement, trend retracement. Trend retracement to where? Back to that technical equilibrium area. It's exactly what happened. Now I have another higher low. Now what I would want to be able to see here, this candle's not great, what I want to be able to see is that this higher low leads to a higher high, which is trend continuation on my 5-minute chart, and then once again I can raise my stop. That's a trailing stop system to put you in the position to have win-win situations in what you're doing. So I think that basically covers some charts and trades to talk about today. My big winner on the day is this FUBO, which I've been in a swing position on really since this day. $30, $31 areas, big resistance. So I want to see a close above 31 in FUBO today. And then you have this gap, and I think that this thing could, clear a way to be able to first stop, get back to 37.50. So that's been a fantastic trade. But basically, that's all I really wanted to go over with the group who follow my weekly webinar this week. I wanted to talk about big picture market. Why do I always start with big picture market? I do the same thing with my morning meeting, my afternoon meeting every day. Because everything stems from the big picture market. Even if you are exclusively a day trader, which I am not, but even if you are exclusively a day trader, you need to have a constant eye to the market technicals, starting with the big picture and then working your way down to the small picture, because that's going to give you an understanding of probability. The correlation between individual equities and the market as a whole is very high. If the entire market is selling off and you're trying to buy longs, you're putting yourself in a really difficult spot. So, we started with the SPYs, Qs, and the IWM. We're seeing that amazing relative strength out of the IWM, which is making further highs even as we're having this conversation right now. And then we broke it down to, some of the individual equities that we're looking at for today. So with that said, let's kind of go back to the presentation here. I want to talk a little bit about T3. So, T3 Trading Group is the FINRA registered broker dealer arm of T3. T3 Live is more of the education and media company. T3 Trading Group engages in trading accounts, professional trading accounts, and retail trading accounts. Again, I've been a professional prop trader with T3 for like a decade now. We also have retail accounts available as well, which I can also speak a little bit about. But T3 Trading Group is one of the largest proprietary trading firms in the United States. We have over 500 licensed professional accounts. We've got offices spread throughout the East Coast. Our headquarter office is in Manhattan. That's usually where I'm located. Right now I'm in Idaho. I just turned my head around to look out the window. I've got a beautiful view of the snow-capped Teton Mountains. I can't wait to go ski them tomorrow. But we also have remote traders throughout the country. Right now everybody's remote because of the COVID situation, tuning into our virtual trading floor, the Pro Desk. That's where the pro traders are located. You would have to become licensed in order to be a pro trader with us. You have to pass the SIE exam, Security Industry Essentials, and the Series 57 exam. We'll sponsor you for the exams. We'll provide you with study materials. If licensing is not for you, well, that's fine. That's why we have retail accounts. Our retail accounts do not require licensing. They're much more limited in terms of leverage because they're governed by FINRA's Reg T, which limits margin to 4 times for day trading and 2 times for overnight positions, unless you have a portfolio margin account, which is an account that's in excess of $500,000, in which case I think you can get 6 times. But our professional accounts require licensing. Once you pass those exams, we have 3 different trading software options: Lightspeed, Sterling Trader Pro, and Wolverine, also known as WEX. Sterling Trader Pro is the only option for our retail accounts. We have asset classes, including equities, options, futures, options on futures. Personally, I'm an equity-focused trader. One of the biggest benefits of the natural leverage that you're able to get but as a professional prop trader, which I'll talk about in a second. Basically, once you fund your professional account, we give you 20 times your account in buying power for day trading, 8 times your account for overnight positions. I have no need to trade options. Options are a naturally levered product, but they're subject to time decay. So my thought process is always, why do I want to deal with a less liquid product that's subject to time decay just for capital access when I already have as much capital access as I could ever want? With that said, we do have options, and I have options traders who are in my group. They're primarily focused on utilizing options for hedging strategies, or they're utilizing spread type trades, which that makes a lot of sense to me. But for my approach, I'm directional with a lot of what I do. I would much rather just be focused on equities where I've got more liquidity, I don't have to deal with time decay, and I can be involved in those swing positions. Education and development is something that's extremely important to us. Whether you're a new trader or an experienced trader, new traders is a great place to start. All of my traders get access to the training program that I developed. It consists of a series of lectures that last for about a month. Starts with the very basics, basics of technical analysis, basics of candlestick analysis. Then it works its way into more advanced game planning for reward maximization, risk management, how to trade IPOs. But the truth is, even my experienced traders, and I've got guys in my group, I have a fantastic group. Some of these guys have decades of experience, former fund traders, fund managers, floor traders, pit traders. They still get a lot out of my training program as well, even though it starts basic. There's different perspectives that they can pick up. There's different, there's the ability to learn about routing, which is something that I'm pretty knowledgeable about, and honestly a lot of people are not. Routing is extremely important, especially now, to understand. Routing is really important because of understanding how the HFTs are front-running orders that retail traders are implementing into their personal accounts, right? Commission-free accounts does not mean free. What it means is we are selling your orders to HFT firms, so you're going to get worse pricing. In order to open a professional account, again, you have to have a capital contribution. I already mentioned the leverage. You get 20x in buying power for day trading and 8x in overnights. Without a doubt, that can be a double-edged sword. It makes risk management extremely important. If you go 20x in a position and you have no risk management in place, it's a great way to lose a lot of money in a short period of time. The opposite's also true, right? So access to this type of capital opens you up to different types of strategies that you would not be able to execute in a retail account, but it makes risk management extremely, extremely important. And by the way, all the education and training and everything else that I provide, it's all for free if you have an account with us. My sole goal is to make the traders who have accounts at T3 Trading Group to be as successful as possible. It's a win-win. I have no interest in really charging people an education-free fee up front to become a professional trader with the firm. You get that for free because the firm's going to make money off of your success and not off of you just, paying for a class. And for experienced traders, maybe you have no interest in education, that's fine. You have an interest in capital access. T3's size means we can work with just about anybody. You want to contribute $2 million into an account because you want access to $40 million? No problem. Here's my email. Reach out. And you get all these other great products as well for free. My VTF is called the Pro Desk. You get my training program as well. You get Scott Rudler's Trader Hub VTF. You get Rudler All Access. This is thousands of dollars of stuff you get for free by having a retail account or a professional account. So I think that these add-ons here, plus having direct market access, really, I think makes T3's offering to have an account here unbeatable. There's nowhere else that you can get access to a guy like Scott Rudler for free, who's got decades of experience, the chief strategic officer at T3 Live, just by having an account. Where else are you going to get access to a professional group of traders to learn from and to bounce ideas off of, like what I'm running? And where else can you find that except T3? I don't think it exists. So again, any of this stuff interests you, reach out to me. Here's my email address. You want to talk about trading, reach out. You want to talk about opening a professional or retail account with T3, reach out, and I'll be happy to either provide additional information or put you in touch with someone else on the team here to put you in the best position for your own success. So I think that'll do it for today. I'm going to get back to the market. I got a lot of positions on. I'm seeing my P&L here move by relatively large amounts of dollars, while I conversate with everybody today. So thank you everyone for participating, and I will look forward to seeing everybody again next week.